Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening well and I'm your host Nickey Mirchandani. Indian equities are set for a mildly positive start in an eventful week amidst mixed global cues. Talk about gift Nifty is hinting at a mildly positive start to a flat start coming in for the Wall Street. US markets ended higher. S&P 500 snapped three-day losing streak. Talk about Asian markets, they weaken ahead of US inflation data. Let's talk about FII. They've sold shares to an extent of 224 crore and DIIs too. On the other side, have bought equities to an extent of 1,150 crore. Also, in terms of FNOQs that we have this morning, FIIs, they've been net buyers in index futures, have been sellers for index options, have been buyers for stock futures too. Along with that, have been buyers along in Bank Nifty futures, where they've been selling off is the Bank Nifty options. In terms of the FNO ban, updates there. New in ban, Chambal Fertilizers, still in ban, Indiabull Housing Finance, Balrampur Chini, Delta Corp, Hindustan Copper, India Cement, Manappuram Finance, SAIL and PNB. What comes out of the ban? BHEL. These are the updates that we have, but let's get to know more about the trade setup, strategy of the day and FNO updates with Prashant Sawant, the founder of Catalyst Wealth. Morning there, Prashant. Prashant? Am I audible? All right, we're trying to connect with Prashant just to see if we can patch up online with him. Prashant, good morning.
Hey, good morning, Nickey, and good morning to all the viewers.
All right, how's the trade setup looking like this week? Last week was indeed a good one. We closed in positive after many weeks. You think the euphoria will continue? And the million-dollar question that most of us ask, will Nifty cross that 20,000 mark? What's your assessment?
So, Nickey, last time, I believe towards the fag end of July, when Nifty was approaching 19,950, my view was to book profits and not wait for 20,000. This time, I have a different view. I think now we should trail with 19,700 spot. And I feel that in the month of September itself, we might not only see the levels of 20,000, but we might also see levels around 20,200 to 20,300. The setup looks extremely bullish. And I think the good part is that there is sectoral contribution from across the sectors. There is no particular sector which is single-handedly driving Nifty. Only thing is that Reliance now needs to contribute for this move to materialize. And at the same time, when I look at Bank Nifty, a major level that I was tracking is 45,200. Today, we are just kind of striking that on the opening basis if you look at the pre-open. So if we sustain above 45,200 on spot, I think we can look at a 1,000-point rally in Bank Nifty. The good part now, which was missing for the past 2 months, is that HDFC Bank is contributing well, and already the pre-open also looks strong. I think it looks like a good week based on the opening. And you can definitely trail, but stay on the long side itself. Any and every dip can be bought, and you can hold Nifty for targets around 20,200 positionally, which I feel we may see in the month of September itself.
Sure. Also, your view coming in on, the updates that we have for RIL. Of course, you've spoken about it. Along with that, Adani Enterprises, they've been stocks in focus. Apart from that, any two recommendations for our viewers?
So I think Adani Enterprises, I would wait for some time. It's still not out of the woods. I think it is just looking at a good bounce back, a good reaction to a news of promoters increasing the stake. I think if you talk about Reliance, so definitely one can buy and hold with a stop loss of closing basis below 2,400. Positionally, we may reach somewhere around 2,500, 2,520. But the real momentum in stock will be start about 2,520 spot, and then it may move very strongly. So I think that is one area one can look at. Accumulate Reliance would be my word. Two stock recommendations from my end. One would be Tata Motors. I think this can move very strongly. It has shown conviction on the weekly closing basis. So one can hold with a stop loss or buy with a stop loss around 614 closing basis. And you can hold for targets around 660, 670 as well. Next pick that I'm looking at is from the mid and small cap space. It is HBL part. So I think you can hold and buy this stock with a stop loss at 245 closing basis. It looks ready to capture somewhere in the range of 320 to 330 levels.
All right. Also, what do you make out of something like a Balrampur Chini? The stock is an F&O band right now, but the sugar stocks have been doing rather well for last couple of sessions out there. What do you make out of these counters?
I think if you look at the sugar stocks as a group, they have definitely shown strength. Balrampur has not shown the same kind of strength that the mid and small caps have shown. But if you are stock specific about this, I think one can definitely buy with a stop loss around 390, 392 zone and hold for targets around 425, 430. But if you want more momentum, I think the one stock you can look at would be Renuka. I think that has shown good move in the last week and we are getting a good dip as well. So you can buy with a stop loss around 45 closing basis. And this stock may show initially targets around 65, but the real move in the stock would start above 65, and you can even see levels around 70, 75 as well.
All right, Prashant, I briefly remember the last conversation that we had in the previous week. We discussed and briefly touched upon the multi-bagger ideas that now one can look at within the mid-cap and the small-cap space after what we saw in terms of BSE, in terms of Moscow Dogs. IRCTC too is doing well. What's your assessment on that one?
So I think, Nickey, for the next half of the year, I think one segment or one sector which can do really well is pharma. And one stock that I like in this is Bocard Pharma. So I think you can accumulate this. It has been an underperformer in the sector. If you see the overall scenario, I think it may show a catch-up rally. Overall, a good base is formed after a long time, and the stock may be ready to move strongly. So that is one space. Another space would be Mishra Dhatu Nigam, that is Adani. I think it falls under the defense radar and one can accumulate this as well. So these are the two areas, and a new stock which got listed last year is DCX. These are the three ones which one can accumulate for sure.
Sure, Prashant. Let's address the market open, and we are looking at a positive start coming in for Indian equity markets. 0.3% clocked in on Indian equities. Nifty 50 up and about with gains of 0.3%. We were expecting rather mildly positive start, but it's positively surprised, right, in terms of the gains that we're seeing on the screens right now. Look at Bank Nifty. Let's look at the chart there. How is that stacking up just to see where the momentum has been heading? Well, Bank Nifty 2 seems to be participating, or rather just say lifting up the sentiment early this morning. In terms of what we have for mid-cap and the small cap, mid-cap is outperforming with gains to an extent of 0.75% there. And in terms of small cap too, we're seeing outperformance coming in to an extent of nearing about that 1% mark early on the screen this morning. Let's also look at the sectoral indices that we have. IT has been faring well as usual, gains to an extent of 0.3%. In terms of other sectoral indices that we have, pharma has been doing well and has clocked in gains to an extent of 0.4%. FMCG acts no differently and is witnessing some amount of traction in early deals. Also look at other sectoral indices that we have. Consumption story remains intact. Let's look at realty, auto for that matter, and also PSU banks. Auto has been doing well, gains to an extent of 0.5% for auto index and realty index too. Perhaps a bit of outperformance coming in by the realty names, which have been doing well with the property prices soaring high. But look at PSU banks. It's with gains almost nearing 1% mark of gains early deals. Well, it is a good start indeed to an eventful week where we're seeing host of listings and IPOs which will be hitting in this week. But let's look at the market breadth. 44 advances, 5 declines. Also, let's look at the top gainers and the top losers that we have early this morning, just to see where the traction is coming from. Adani Ports, well, Adani Enterprises and NTPC. Do remember the fact that we've discussed in Adani levels way before we could open in HCL Tech, Hero MotoCorp and Hindalco. These are some of the other top names that we have on the list. Tata Motors, Apollo Hospital and Wipro, some of the other gainers out there. Let's look at the top losers that we have early this morning. Infosys, IndusInd Bank and Bharti Airtel. These are some of the top losers. Titan, HUL and Eicher Motors, some of the other top losers. Interesting how a bit of profit booking has crept into Bharti Airtel after the gains that we've been witnessing for this counter for past previous few sessions. So that's one that we need to watch out for. But what we also need to talk about is the new listing. Rishabh Instruments is going to be listing in on BSE and NSE on September 11. The final issue price has been fixed at 440 per share, and the IPO, to remember the fact, was subscribed 31 times on the third and the final day. The bids were led by non-institutional investors essentially, and the shares in the grey market right now, they've been trading in the range of 500 to 502 ahead of the listing, hinting at a gain of perhaps 14% from the IPO price. What I also want you to look at is Ratnaveer Precision Engineering, yet another kid on the block. The stainless steel based products manufacturer is going to be listing in on exchanges on September 11. The listing date was brought forward from September 14 to this date. Final issue price has been set at 98 per share. To remember the fact, as per the grey market premium, the stock trades at a premium of 40% over the issue price, perhaps even 50% according to some of the experts. So do expect a strong listing coming in for this one. Reliance Industries, like I suggested earlier, there's a bit of development coming in on a couple of fronts for this one. First is the company has begun in exploring, it's just exploring a foray into semiconductor manufacturing facility. This is the news report that we're carrying from Reuters. It's a move which perhaps will not just iron out the supply side issues, but will also cater to the growing chip demand in India. The telecom to energy conglomerate holds in early stage talk with the foreign chip makers. These are essentially going to be, they have the potential to become technology partners. RILS is yet to make a call on whether they want to ultimately invest. That's the news report that we're picking up this morning. Adani Enterprises. The group has increased stake in two of the group listed companies. Promoter has just increased stake in the flagship firm, that is Adani Enterprises, to 71% now, beg your pardon, 72% from 70% that they've seen earlier. Promoters of Adani Ports 2 have also increased their equity by as much as 2% between August 14 and September 8, taking their total holding within this to 65%. So that's a 2% increase coming in on that one. Look at the gains that we're looking at for Adani Enterprises, 1.8% uptick in early deals. There is a brokerage report on Zomato. It's a small domestic one where Equirus has initiated a long rating on Zomato. Target price has been fixed at 135 per share. Stock is seeing some momentum in early deals. It talks about the company being a solid play on the country's rapidly expanding food delivery space. It also talks about the industry profit, which is only expected to rise given e-commerce, along with that the Q-commerce, other agencies provide value creation. So that's the word coming in, but we're going to go back to Prashant and check with him. After opening deals, what looks pretty on the screen right now?
So I think, Nickey, the opening has been really good. And if you look at stocks like L&T and Voltas, they are showing very good strength. But I think one stock that is standing out for me is Bajaj Finance. I think if you look at the current price, somewhere around 7,430, I think this looks good to move strongly for the week. And one can buy this with a stop loss somewhere around 7,350 closing basis and hold for targets in the zone of 7,550. It has come out of a strong range breakout backed by volume. So I think this looks good for the week.
All right, Prashant, we'll just leave it at that. And thank you so much for taking out the time and speaking to us this morning. All right, let's address the fundamental story. Let's address the FII flows. Let's address the sectors that you need to keep a close eye out on. And to join us early this morning is Pankaj Tibrewal, EVP and Fund Manager at Kotak Mahindra Mutual Fund. Morning there.
Good morning. Good morning. Good to be on your show.
Pleasure is all ours. I'm going to start off by your assessment. I know you're going to take an aerial view there, but just for the sake of the viewers, Nifty, perhaps a lot of euphoria is running across the street when we talk about the Nifty hitting the fresh data for, the fresh high at the 20,000 level. Bulls appear to have overcome the apprehension about expensive valuation and higher interest rates. How are you looking at the scenario and how are you looking at the flows?
Good morning. I think from a flow perspective, flow continues to be extremely strong. And in the last 6 months, we have seen FIs pouring in about almost $21 billion. And just to, recollect this number, in the calendar year 22 from FI side was negative $15 billion. So you have seen a huge swing, and that's primarily led by concerns on China. And a large part of EM allocation ex of China is flowing to India. And we have seen country dedicated funds, especially India dedicated funds, getting decent inflows, which has not happened in the last few years. On the domestic side, I think the financialization of savings continues to be a very strong theme. The SIP flow continues to be at 15,000 per month. And we have seen strong flows from domestic side as well. Combined with that, we have seen a liquidity which has been extremely strong, which is supporting the market. On the broader side, I think there are some concerns, especially on the mid and small cap. So if you look at this year, calendar year to date, Nifty is somewhere up 9.5%. Bank Nifty is up somewhere around 4%. And mid and small caps are anywhere up between 28 to 31%. And many stocks have multiplied over the last few months. So clearly the greed is visible on the street. And we believe that the momentum is extremely strong. However, one needs to be careful in this momentum because mistakes are made in the bull market like this, which probably hurts your portfolio over the next couple of years. We saw that in 2017 as well, where we saw the best of the mid and small caps actually flying off. And then in 2018 and 19, Nifty didn't fall. The broader markets had a very sharp correction. So clearly, from a greed perspective, it's visible on the streets. Stocks are definitely moving up very fast on order inflows. And I think investors are only focusing on P&L and narratives rather than focusing on balance sheet and cash flows, where one needs to be careful about.
Sure. I would want to understand from you, do you think Indian equity markets are benefiting on account of the outflows that we've seen from China? Or let's just say that now that more of the leading economies have started looking at China as a black box, and by virtue of that, we're seeing a bit of investment flowing into Indian equities. Perhaps in the G20 summit, you also had noted economists talking about China miscalculating about India's emergence at the world stage. How do you look at the situation when it comes to the FII flows? Do you think India is benefiting because of that? Or do you think there is enough strength within the markets to kind of drive back home the foreign institutional investors?
So clearly, what is happening in China is advantage to India from a capital market perspective. And clearly, over the last many years, if you look at China, has not created wealth for foreign investors. And last year was the first year where you saw the absolute Chinese population started to decline. And obviously, the growth rate which China has seen for 3 decades may not be repeated in this decade and the coming years for sure. And hence, I think India will be the growth engine of the world. We have 3.5% global market share. But over the end of this decade, incremental basis, we may be having 15% share in the global GDP growth. So that's a substantial number. And most of the FIs are taking cognizance of that growth. Also, the political stability, the reforms, the entire IT stack which has got created is helping us. And don't forget that for many decades, we had a unipolar world where US was the large daddy to the world. Now we are in a bipolar world where geopolitics is playing a very important role. And most of the companies in US are looking to, look for alternatives apart from China from a supply chain perspective. And there, I think India has a great opportunity to score, provided we don't make some self-goals. And I think over the next 5-10 years, manufacturing is one theme which can be substantial, and that can lead the growth in India. If you look at the late 50s, 60% was agriculture in India's GDP, 15% was services, and about 18 to 20% was manufacturing. Fast forward to 2022, services and agriculture have swapped the places. Now services in India is about 60%, agriculture is 50%, but manufacturing is there at 17-18% only. So I think there's a large opportunity in this current environment where many industries, many sectors can look for export opportunity, and we are seeing that happening at the ground level. And I think that's the reason I believe that over the next 5-10 years, India could offer that opportunity to FI investors, which many other countries did in their life cycle from a emerging market to a developed market.
Since you have spoken about manufacturing, let's also address an EMS space. Because with no regulatory and proprietary barriers to the entry, an EMS business seems to be a little more valuable perhaps from the investor's perspective, but a bit vulnerable at the same time due to the threat of new entrants. How are you looking at the space? Do you like it?
So if you look at the electronic space, I think a lot of work is happening over the last 3 years, especially led by the PLI. And you saw what's happening on the phone. For your viewers, I would strongly recommend that please, if you haven't visited, please visit a place called Sri City in Agra. It's seeing is believing. 10,000 acres of industrial cluster and the entire electronic ecosystem is getting developed. So Apple came in. Along with that, the three suppliers, Foxconn, Pegitron, Wistron came in. And along with that, the entire ecosystem of camera module guys, PCB guys, the mic guys, everybody is there now. So I think India over the next 5 years can have a great opportunity to become the phone manufacturing hub for the world. Similarly, we are seeing the same opportunities pan out in air conditioning and other electronics. And I believe we are still as a nascent state on chip manufacturing. If we want the electronic industry to flourish, I think we need to have fabrication plants on semiconductors. We need to have R&D on chip manufacturing. And I think the electronic industry overall, the value chain looks to be extremely good. However, from stocks perspective, we need to be a little careful looking at the valuations. Valuations are not very cheap in this space. They are already pricing a very strong growth for next 3-4 years. And also be mindful that R&D will play a very important. Companies who invest in R&D probably will see better growth in days ahead. Also, don't forget that this is a working capital intensive industry. You need to be careful on the cash flow side. Many of the companies today are not generating operating cash flow. So if they try to grow faster, they will need to dilute equity or take on debt on the balance sheet. So one needs to be careful on those sides. Otherwise, the longer term runway for growth looks to be extremely strong on the electronic industry side in India.
Which are these companies? I'm sure you would not be able to be very stock specific with us, but at least from the sectoral point of view, you can always tell us that which are these companies which perhaps are lacking the kind of vigor that we'd want to see on the operating levels, the cash from the operations. Do you think new age companies are perhaps the ones that you would want to talk more about? Something like a Zomato, Paytm, of course, has started making profits on the operational level. Do you see that? How are you looking at the entire new age stocks right now?
So rather than speaking on stock specific, I think the new age companies which have the right business model, cost economics, unit economics right, will be the winners in the coming future. And we believe that there are a handful of companies in each and every different domains which are leaders in the sector. What was missing is their focus on profitability and cash flows. The moment it has started coming in, market has started to reward them. So we believe that this was a learning phase after listing for many of the new age companies. I think smarter ones have learned it through the hard way. And I think the opportunity size is very large. So we are very selective in few of the names and positive there. And also don't forget the basic investing mantra that top line is vanity, bottom line is sanity, but cash in bank is reality holds true across sectors. So in the short term, anything can happen. Liquidity can drive, narratives can drive, but finally stocks are slave of earnings. And over the medium to long term, if the company doesn't generate profitability along with cash flows, probably will not be the wealth creators. So I think the basic philosophy and principles of investing should not be ignored in this market when there's so much of momentum around us.
That's a point well taken and made there. But what do you make out of the pockets which you think are a little undervalued at this time? Perhaps the street isn't really captured much on trend. Earnings look solid, or the expectations of the upcoming quarter, the earning profile for that sector looks solid, but street isn't really gung-ho about it. What do you think?
So one sector where we have been positive on for the last at least 2-3 quarters has been pharma. And structurally, for the next 6 to 12 months, there seems to be some changes happening there. Drug shortages are there in the US right now. and which is helping most of the pharma companies on the US side. Also, in the domestic business continues to clock 10 to 12% growth. These are cash throwing businesses, very high on ROC and ROE. So pharma, after a long time, seems to be coming back. And first quarter was the first, after many quarters, where as a cohort, most of the pharma companies delivered decent earnings growth. So we believe it's a sector which you have to be very bottom up stock picking. But I think this sector can create value. The sector has consolidated over the last 4-5 years, and valuations are not that expensive as we speak. And these are tangible businesses where next 12 to 18 months could be quite okay. So one is farm. Second is auto and auto ancillaries. We have spoken in the past. The third is the real estate, and the entire derivatives around real estate seems to be reasonably well poised from a growth and balance sheet perspective. Financials also are not very high on valuation, especially the large cap private sector banks seems to be in a very sweet spot. They are gaining market share. Valuations have, kind of reasonably collected. And most of the banks are gaining market share. So I think financials, private sector bank, few public sector banks seems to be very well poised. That's our, thought process on investing and portfolio construction at the moment.
Pankaj, two questions there. First is, since it's a pre-election year, there is a lot of euphoria which is building in. Perhaps do you see a further upside coming in for Indian equity markets by the end of the year? That's part, A of the question. Part B is, let's talk about Reliance Industries, which is a heavyweight, of course, contributing to major gains coming in, or the losses for that matter. It's an index heavyweight. Reliance has partnered with NVIDIA to build in the large language model, AI model, and it's also deciding to foray into semiconductor business. It's an intent. There is no particular timeline or it's very early stage negotiation perhaps to look at semiconductor business. But with two more areas of growth coming in or avenues coming in for RIL, do you see that a significant shareholders value appreciation with all of this? How are you looking at it?
So you would appreciate that we can't speak stock specific. So I'll restrain myself on making any comment on any company. But to your first question, I think the volatility right now in the Indian equity markets is very, very low. So if you look at the Indian VIX, it's trading at about 10.2, 10.3. And probably market is a little blindsided to the election volatility which can come in. In the previous election years, 6-12 months prior to the election and maybe 6 months after the election, we have seen that volatility actually picks up. And don't forget that by the end of this calendar year, we have 5 state elections and then the general election in May 2024. So our belief is that as you move ahead, markets will start seeing a slightly higher volatility, and that may provide opportunity for medium to long-term investors to come in in the market from an investing perspective.
All right, Pankaj, one last question that I have in mind before I let you go is, A, what's your assessment on the sugar companies and also oil and gas companies? Two completely different sectors though, but a bit of re-rating candidate perhaps for oil and gas companies. Are you looking at it any differently from the quarter that is clocked in the Q1 quarter? Are you expecting same kind of show coming in for quarter 2 as well?
So clearly, first on the sugar companies, I think over the last 3-4 years, we have seen that this sector, which used to be a lot more cyclical, that cyclicality has got arrested as ethanol has become a large, profit generator for most of the sugar companies. And we believe that going forward, government is committed to blending in ethanol, and that's a very good source of profit for most sugar companies. And the second part is that if you look at this year, ISMA has revised its sugar production down because of the rainfalls. And our belief is that today, I think the estimate is about 30 million tons. Anywhere give 1 million ton here and there could be the production. So we will be running tight on sugar inventory. And that's reflected in already the sugar prices. Our last week channel check suggests that the sugar prices have moved to 38, 39 rupees, which used to be a few months back 34, 35 rupees. So clearly sugar prices at the ground level suggesting tight demand-supply gap in the sugar sector, which should bode well for most of the sugar companies as we speak. So that's on the sugar sector. On the oil marketing companies and oil companies, we saw a very strong earnings growth last quarter led by strong marketing margins and strong GRMs. We believe that that kind of a profitability may not be repeated again because GRMs will be under pressure. Marketing margins, crude has moved from $75 to $90. So the extra money which you were making probably will come under pressure. Having said that, I think valuations in many cases are quite reasonable. They are trading at very, very reasonable valuations as we speak. So I think we need to be stock specific in this sector, but this sector over the next 3-5 years seems to be very well poised.
All right, Pankaj, we're just going to leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you. Thank you so much.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.